Hey everyone, welcome to the Wednesday Bitcoin update. Now, happy hump day, and let's get started. Now, we're here for getting started in crypto. As you can see in the background, my new light, and it's pretty cool. I'm loving it. And yeah, so let's get into the charts straight away because that's what you're here for. So if you head to Twitter or even TradingView at the moment, I've got this chart. So we have a market cycle for Bitcoin every 4 years. That was set by Satoshi. So that was set that, every 4 years, Bitcoin has a halving or a halvening, as some people call it. Now, that works with the quantitative tightening that the governments do as well. So every 4 years, it seems that they have a tightening. So they have a quantitative easing where they print money, and then they have a quantitative tightening where they sell bonds and they, just get rid of bad debt. It just evaporates. A lot of the time, markets like the Chinese and Japanese will pick up a lot of these bad debts. So, if China was to call in all of the bad debts that they have with the US would go broke. But it's lucky for them that they all sort of expire at different points of time. So it really can't happen. So what is happening in Bitcoin? So when we do get the halvening, about a year later, we get an all-time high, and that coincides with what happens with the quantitative tightening. So straight after, we get a quantitative tightening because the inflation in the market is way too high. So as we saw in 2017, we saw, a massive all-time high of Bitcoin, thousands and thousands of percent growth in Bitcoin. So from, only a couple of dollars, I think it was about $300 in 2013, up until 19,783. So that's literally the trade of your life if you were in that. And we see that in 2016, we had a halvening, and then we had the pump. So it takes about 18 months from the halvening until we get to the high, and then the cycle begins again. So December, so we had a little bit of, so the quantitative tightening, and then we got this wave one. So, at this point, the government's sort of really tightened things up, and then we had this major pullback because we had a liquidity and deleveraging crisis. So, we all know what happened with BitMEX when their trading engine failed and, the liquidity dried up. So that happened not just on BitMEX, but on a lot of exchanges that were margin trading, and leverage trading. And that's why I only trade spot. Because of the high risk that can happen with those. A lot of the cryptocurrency exchanges like Bybit and BitMEX and Mexi and Bitfinex has always done it. And Binance all trade spot. So it's become sort of a big thing where a lot of the exchanges are getting back into spot trading from the leverage trading. So the rules and regulations of country to country are making that quite restrictive for a very good reason. So, there are low leverage trades that you can do on those websites, but most of the time you can't do those 100 times trades, depending on what, territory you live. But that's a good thing because you can't really get those major liquidations that we did see sort of in the 2018-2019 period. And that's what causes cascading stop losses. So the reason we haven't had that major pullback in this region is because a lot of that, over leveraged traders have been taken out of the market. So London cracked down, Australia cracked down, the US cracked down. So you can't over leverage. So that's why we've had a very slow bleeding market. So, it's moved the same amount that it would normally move. So these 50 to 60% moves, but it's been a slow bleed. So it's been actually quite a painful sort of market to, navigate and, sort of trade in these regions, just due to the fact that this is continuing to go lower. So when we get to, this chart here, we can see that we've got, I'm taking this as a running flat, because it's got a perfect count in Elliott wave for that. Now, with this running flat, potentially this C wave could be complete, because we've pulled back on this last wave to the 618, which means we could be starting an impulse wave. So where we know whether this pattern is the correct one is 34,500. So that's the pivot in this region. So when we look at the alternate chart, we can see that, at that 34,500 sort of mark, if we turn down sharply, which we probably won't do due to the most markets being spot now, it'll be a slow bleed. So it'll be like, big players like Bitfinex or, Michael Saylor and MicroStrategy selling back into the market at those points. Other than that, it's just going to be slow bleed. So, but that 34,500 is a pivot that either takes us down to retest the support that we've just, bounced from, or it will take us lower to retest the 2017 high. So that doesn't take us out of the super cycle at all, because it's still within that realm of possibility that, this is the wave 1, this is the wave 3, we're in a current wave 4. Elliott wave says that 1 and 4 cannot overlap, only in leverage markets by a wick. So potentially we still have those two patterns. So at the moment, we can see that we're getting a small pullback, but I think we should continue up to that 34 range. And then that's when we'll need to sort of adjust and see whether we're continuing on, whether the market still has that momentum, or if it's going to come down and we're going to have a slow bleed again. So this market, when we look at that cycle with the halvening and the quantitative tightening, so we've begun that this year or last year in November. So that began, and it normally takes about a year to a year and a half for that to sort of process. And then by March 2023, we should be climbing again into the next bull market. It doesn't mean that we're not going to have bounces. We're not going to have, money to be made. There's money to be made in any market. And, especially sort of in the, the smaller regions, and the bear markets or the corrective markets are where you make the big money for the future. So this is where you compound and you start stacking sats, so to speak. And, and then when Bitcoin does take off again, you're in a prime position to, just ride those waves and, enjoy the bull market. So, it's going to be a little bit difficult over the next period. I do expect we will get a wave up. So this wave went from 3,000 to about 14,000 and then came back to 4,000 with that deleveraging. So at this point, we're probably about that point now. So, potentially we could get this wave here, which went from 24,000, that could go to about 40 to 44,000 and then come back down to retest. So, they're the scenarios that we've got at the moment. Either way, I think 34 is going to be a critical level that we need to either break or reject on. And we will know at that time what pattern we're at. So yeah, that's pretty much how we're trading this week. I'm still long. I'm in and out of all of the alts. I'm got a couple of long-term ones, but the majority of them are just, small trades, and I don't have a lot of money in the market as yet. So yeah, stay safe in the market and remember to always have a stop loss. Thanks for watching, guys. Bye.